Hi, everyone. Welcome to our Financial Clarity on Autopilot webinar series. Thank you so much for joining. Today, we're going to be covering how to master your cash flow without becoming an accountant. Firstly, I thought I'd let you know that this webinar is being recorded, so you can rewatch it later if you want. And also, if you have any questions throughout the session, feel free to drop them in the chat, and we'll make sure to answer them during the Q&A session at the end of the call. So I would like to introduce our speakers today. We have William Chung, who's our CFO here at Awesome, and we also have Peggy Chu, who is an accounting team lead also here at Awesome. So we can move on. On today's agenda, we have a few topics to cover. We have why profit doesn't equal cash and how this strips up even when growing business. We will cover the three pillars of clean books. We will also cover how to avoid spending phantom money that doesn't actually exist, the three reports every founder should understand, and key Singapore compliance deadlines you can't afford to miss. Before we go ahead, I'd like to know, how do you feel about your company's cash flow right now? We are going to be sharing a poll in the chat, so make sure to reply there and let us know. And without further ado, we can get started. So I'll leave it with you, William.
Thank you, Nuria. Hi, everyone. So a quick intro about myself. So I've been with Awesome as CFO for the last 1+ year, and over my career, I have helped companies scale from seed stage to late stage, as late as a Series D stage company, raising over $100 million in my whole career. So I'm a CPA myself. Have also spent I think sufficient time in investment banking to understand what it takes for a company to go to a later stage, which means going to the capital market. So if the audiences have any questions, please feel free to connect with me on LinkedIn or drop us a message afterwards. So I think going back to the theme of today, we're talking about cash flow, and some of you might ask why cash flow is important. Because if you have been following the YC Combinator or A16Z blog posts, people are always talking about unit economics, profitability, or rule of 40s, right? And all of these business metrics actually are more related to profit, not cash flow, right? People are not talking about cash flow as much. Why is it so important? I think one thing that a lot of business owners or founders might have missed out is cash flow is like your bloodstream. So it basically is probably the most important short-term measures of the business health. And so without that, company cannot continue to operate. So if you look at the difference between profit and cash flow, profit, we typically look at the viability of the business. It's more long term. We look at whether the company has a healthy margin, whether it's making enough profit to return to the shareholders, or just to have more bonuses for the employees and the management. But cash flow basically affects your liquidity. So you can be super profitable, but you don't have enough cash to pay out to your employee, and the next day you're closed for the business. Or you can also have a very strong cash flow because you have been collecting receipts from your customers in advance, but you're running a hugely loss-making business. It can also happen. So it's important to keep an eye on both, so we don't miss out on these two most important financial metrics for the company. Profits is typically driven by efficiency and your margin, right? Whether you are able to generate revenue with less costs, with less input, higher productivity, or even nowadays with more AI automation, right? And cash flow typically driven by the payment terms. For example, what are the payment terms you set with your customers? Are you setting up, are you collecting money in advance? Do you have the bargaining power? or when it comes to businesses involving more of physical goods or assets, how much leverage do you have with your supplier, right? For I think getting the delivery first before making a payment. And I think the last difference I want to draw here is that profitability or profit actually require more complex and sophisticated accounting knowledge to compile, versus cash flow is relatively straightforward. Basically, is to monitor your bank statements, making sure that you always have a positive cash flow coming in to run a very sustainable business. Having said that, I think both financial metrics require a clean set of data to start with. And what I mean by clean is that you need accurate and complete information for you to compile these two metrics. And then, so we want to talk a little bit about the three pillars of clean books. What do we mean by a clean book? Right? So, first of all, do you have a complete set of records to start with, whether you have the receipt from your customers, whether you have invoices from your suppliers, whether you have some deliverable confirmation from your supplier, etc. So these records are important because it affects how the accountant treat your financial records. For example, you can collect money in advance, but it doesn't mean that that is your revenue. So, if you go to talk to a VC, or if you go to talk to a bank and you don't have that knowledge in mind, then people don't trust your financial numbers as much. Um, Second thing is that we need to reconcile, because you have one set of record, which is the business record, your contract, your invoices. You also have another set of record, which is your bank statements, and your bank movement, right? So, or maybe nowadays, if you have a digital wallet, maybe you're using cryptocurrency too. It's important to reconcile two set of records, so it makes sure that every transaction makes sense, and also has a proper backup of information. And then the last pillar I will call out is review. So even nowadays we have a lot of AI tools, and even though some we also have a lot of AI application, we still think that AI nowadays is not smart enough, or at least it doesn't have all the information in the world to make the right and accurate decision yet, 100% of the time. So that's why we still have human in the loop, just to make sure the last mile is completed and delivered in an accurate manner. We have our internal, I think, confidence scores to help us determine whether the record is good enough for us to proceed, or we actually need human being to be involved. And I think this is the value that the team at Osam is adding to our customers. Um, so right now, I think Osam has our own internal proprietary technology to run a lot of this automation, to move things from paper records to digital, and we will have more coming in the future too. You might ask, so given that I have a bank, right, record, and cash flow is important, why do I need to reconcile? Why is it so important? Um, so number one is you probably, as your company grows bigger, you will have more than just one bank account, because you may be operating across multiple geography. You also might want to have two bank accounts, so you have different banking relationships, just to hedge one against the other. Um, so, and that means you will always have to look at two set of records from time to time, which actually is not the most efficient way for you to monitor your financial health. So that's why we also have created our business dashboard for our customers, and in order to make sure that numbers are accurate, most of the time, we also reconcile the records and making sure and make sure that the records are actually accurate and complete for all the users. Um, I think the business records, they are important. It's not just for reading, right? It's not for your holiday reading, leisure reading, or it's also not just for presenting to investors or to the banks. um, it's also important because it determines how much you owe the government, right, at the end of each year. So you have your taxes, which will be largely determined based on the nature of the transactions and in your financial records. So, for example, you have staff welfare, and in Singapore they are fully tax deductible, versus in certain expense category like client entertainment, there will be some strict rules that applies again the deductibility. Um, and as I mentioned just now, you might have been collecting a lot of money from customers in advance. They may not be your revenue, right? But if you're treating them as your revenue, then you might be having a higher than expected exposure on corporate income taxes. And all of this actually will have a real money impact, cash impact on your business. So do consult with accountants to make sure the transactions are properly class categorized and the nature properly determined in your tax filing. And before I end my session, I want to just conclude it by highlighting the three most important financial statements that you actually need to review at least regularly to make sure you have the financial health of the company, in your fingertips. Number one is your balance sheet. Basically, it determines how much you own and how much you owe, right? You have your assets, which are the things that you own, um, and you have your liabilities, which are the things that you owe. So do keep an eye on that. In my example just now, even though you're collecting a lot of money in advance from your customers, they are your liabilities because you owe the customers an obligation to fulfill those orders. So um, those metrics are important to monitor. P&L, or in the longer form, we call it income statement. So, are you profitable, right? So, and IRS follow your income statement to determine how much taxes. So it's kind of a basis for IRS to determine how much taxes you owe to the government. So it also affects whether you are able to apply for any incentives. So this is the second, I think, very important financial statement to look at. And lastly is your cash flow. I think going back to the beginning, why cash flow is important. Um, it determines whether you're able to continue to run your business in the future. So make sure there is accurate cash flow prepared regularly so you can review. And more importantly, for I think for a lot of SMEs, is also to have a forecast. So you are able to predict when you might need extra financing in the short run, so you can have that bridge ready before you need them. So these informations are important for you to monitor to run your business. And of course, if you are a venture, if you're looking for fundraise, then you all definitely need to um, have these financial statements ready, before, in order to go into any due diligence process. So I think that concludes my part. And then maybe next I will hand over to Peggy to talk about compliance in Singapore.
Hi everyone, I'm Peggy, the accounting team lead at Awesome. So for today, I'll be bringing you all through compliance in Singapore, which deals most on ACRA and IRAS. So the two big bosses in compliance in Singapore will be ACRA and IRAS. So in terms of the timeline, So what relevance to you as the business owner will be these three. ECI, also known as estimated chargeable income. This needs to be filed within 3 months after the fiscal year end. So it's mandatory. So regardless of whether there is any taxable income, you have to file this unless you're qualified for a waiver for ECI filing. So the waiver is only applicable when you have annual revenue less than 5 million and also estimated chargeable income of nil, which means it's a zero or loss making for the financial year. So failing to meet ECI, although would not result in any penalties, but it will then take away your benefit for being able to enjoy tax installment. And also, without filing an estimations on your own, IRAS will then issue tax bill based on estimations based on whatever information they had on hand. So which might even be far away from what you have in your book. So you're encouraged to meet this ECI deadline. And next one will be Form CS, or we also know it as corporate tax returns. So this is due for filing every 30th November each year, and failing to meet the annual tax return deadline will then result in penalty up to 5,000 Sing dollar, or compositions will be imposed. And lastly, annual return. Annual return, you will have to file it if you're ACRA. This means this is for annual filing to prove that you are active. So this is due for filing 7 months after the financial year end, and failing to meet the annual return filing deadline will also cause penalties to be imposed. So other than these three, another one thing that you are very important for business owner will be GST. So do monitor your book. Whenever your taxable turnover is approaching 1 million, you will have to be registered for GST, because late registrations will result in step penalties, and do make sure that you monitor your books. So for bookkeeping, it will generally takes like 20 hours a month for you all to complete. So while a traditional accountant is compliant, but it will be slower in comparative, which means you can't make decisions today based on last year's data. So the solutions here will be to automate the groundwork. So by having the automated processes, it will then allows you to focus on strategy, which means that a snap of receipts will then translate into an efficient interface for your reporting purposes. And at Awesome, we will handle recording, filing, and at the same time ensuring that you are complying with the regulatory timeline, as well as to ensure that your information cifers are secured. So we'll take over all the administrative work and present them in an efficient interface for the business owner. So whenever you have new receipts, you will just have to snap the picture, and we'll handle the recording, reconciling, and filing on behalf, and you will get the strategy without having to do the data entry. So it's time for everyone to niche your drawer full of receipts and aims to work easy accountant with automations. So at Awesome, we do offer smart solutions to simplify your business operations, which means that you can stay on top of your cash flow, get a real, clear view of your finances, and track your income and expenses effortlessly, and to make informed decisions for your companies. It also means that you get to reduce your monthly OPEX. And other than that, it also simplifies your bookkeeping and tax filing, because Awesome will handle all your accounting tasks from processing documents to generating tax reports. You will never have a deadline missed with Awesome compliance calendar. And lastly, you have someone dedicated to support you on all your accounting related matters. So if you have any questions on your company finances, you could actually get a quick answer or personalized guidance from dedicated Awesome's accountant via live chats. Yeah, that's all that I have from my part. Back to you, Nuria.
Thank you so much, Peggy, and thank you, William, for sharing all these insights with us. So now, before we go ahead into our Q&A session, we want to let you know that we currently have an offer going on with Aspire, where we'll basically cover your 315 Singaporean dollar government registration fee if you're incorporating, and help you open an Aspire business account to get $250 cashback. So if you would like to learn more about this offer, you probably are able to see a link right now on your screen. So make sure to click that link and learn more. Okay. Now onto our Q&A session. If you have any questions that you'd like to ask our speakers, feel free to submit them in the questions box down below. If you can see at the bottom right corner, there's a questions box. Feel free to submit them. We already have some questions that were submitted to us by people that couldn't join us today. So to save some time, we're going to start answering those. And in the meantime, if you come up with more questions, we will answer those as well. So I think we can start with this question. This would probably be better for William to answer. So someone asked, how much cash should I actually keep in the bank?
Yeah. Well, I think it depends on the scale of your business and how much do you need as a business. I typically would suggest to look at least a 12 months runway, because when you are thinking about fundraising, especially in nowadays environment, if you are running a tech startup, you probably need the longer time in order to raise fund. I think in the past, the round probably can be closed in 6 to 12 months, right? But nowadays, I think it's taking longer, unless you run a very fast-growing AI business. So I would suggest at least 12 months. And the way you assess that is you typically look at how much every business has its own seasonality. So take a look at your cash burn historically and think about whether you have some big ticket items that you're going to spend in the future, and do a bit of projection, right? And so I think nowadays there are also a lot of helps online on cash flow forecasts, and it's just a matter of addition, deduction. So come up with your own view of how much cash you will need in the future. Make sure you have at least 12 months to run. And I think that probably my quick answer to that. Yeah.
Awesome. Thank you, William, for answering that. We have another question, which is, what if I'm not sure whether all our past ACRA or IRAS filings were done correctly? Peggy, I don't know if you'd like to take this one on.
Okay, I'll take this one. So as you all may be aware, so for all ACRA holdings and IRAS holding, it will be available in the relevant portals. So what we can do as a service provider in terms of checking on the past year's record to ensure that the filings are being done correctly was that when we are reviewing for the current year, we also actually check on the comparative. So whenever we actually identify any discrepancy or any unusual transactions or matters that needs to be rectified, we'll actually bring it to the business owner's attentions, and we'll see how we actually helps to rectify if, let's say, a restatement or a resubmissions of reporting is required from the authority's perspective. I hope that answer.
Thank you, Peggy. Okay, let me see. There's another question here. At what stage should I outsource finance and compliance? I don't know if you want to answer this, William.
Sorry. I I think you typically at the earliest stage, outsourcing would help because you might be focusing on a number of different things, more business related, like how do I get my first customers? How do I find my first or most important partner to penetrate into a new market? You want to spend most of your time in those areas, to validate your business, right? To also start to generate some income. Outsourcing is I think the quickest way for you to get something done, at least on a baseline level. I think at a certain point when you have enough scale, then looking at taking things in house. Of course, it can help you drive some cost savings. It can also give you a little bit more flexibility because now you have the team that can answer to you 24, well, no, not 24/7, but at least most of the time during the working hours. Um, I think those are some of the. However, I think um, the trade off of that is, of course, you have to bear a bigger what we call the fixed costs, right? When you have an in-house team. Um, so I think it largely depends on how agile you want your business to be and at what stage you are at. But typically at the earlier stage, a lot of people will choose to outsource. So nowadays there are also a lot of fractional CXO in the market, and I think it's also coming from the fact that business nowadays are trying to scale faster. So that's why instead of hiring a full timer that take care of things from very basic to very advanced, you can have a fractional to come in and help and with only a partial um, amount of cost obligation. So I hope that answered the question.
Amazing. Thank you, William. Okay, I think we're gonna do one last question and then we're gonna wrap up. So we have a question here. Is it possible we've overpaid tax because earlier filings weren't optimized or corrected? Peggy, I don't know if you'd like to answer that.
Okay, I can take that. So yeah, to answer your question, yes, it is possible that tax was overpaid in earlier filing if, let's say, the filing weren't being optimized or if error were not corrected. So this can happen when reliefs were missed, residential status were incorrectly applied, and also income was reported incorrectly. So on any reporting, I would say any reporting to the authority will have to be reviewed carefully before the assessment. Yeah. So the good news is that IRAS actually allows taxpayer to request amendment and to review it with a more prescribed time frame. So, however, there are certain limitations, and not all cases are being able to be refunded, which is why getting it right earlier it's always the best. Yeah. So the key takeaway here is that don't be panic, but to recognize when a review is necessary and to escalate appropriately so corrections can be made as earliest as possible. I hope that addressed.
Thank you, Peggy. So we have a question here in the chat, so let's answer that and then we'll wrap it up. So we have a question here. Dear organizing team, if we are using a third-party payment service provider rather than Aspire, could we integrate with Awesome or upload PSB account statement for automatic accounting bookkeeping record? I don't know who would like to answer that.
Yeah, I think right now Awesome is actively building up partnership with different financial technology solution for us to integrate with the backend, so we can have all of this backend integrated to save our customers some time. Right now, I think we have an integration with Aspire and LLX. Um, those are the two key partners that we have. And of course, we are also actively expanding to more partners, for example, like Stripe. So, stay tuned. We will have more coming in the future.
Amazing. Thank you for answering that, William. Okay, well, that is all for today. Thank you so much for joining us today. It's been a pleasure having you. And if you have any more questions, feel free to book a free consultation call with our team. They'll be more than happy to help you out. And also, you can follow us on social media. We are at We Are Awesome in all social platforms where we share daily business advice as well as more events and news that you might like to be a part of. So, yeah, thank you so much again for joining us. Have a great day.
Thank you. Thanks, everyone. Bye bye.
Thank you. Bye bye.